The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Welcome to Squawk Box Europe. I'm Karen Cho with Ben Boulos, and these are your headlines. The countdown is on to Nvidia earnings as pressure ramps up on the AI giant to prove the bears wrong and justify its mammoth $500 billion AI financing bet. Analysts are eyeing a near 100% surge in revenue on the quarter.
OpenAI loses yet another high-ranking executive as its chief of data centers parts way with the firm, marking the company's third high-profile departure just this month amid IPO speculation. Canada retaliates, slapping tariffs on around $20 billion worth of American goods as the trade war between the US and its northern neighbour escalates.
Nvidia is set to report its second quarter earnings after the bell today. The much anticipated report comes after other AI giants missed on their quarterly projections, with FactSet analysts projecting second quarter sales of $92.2 billion and an EPS of $2.09. Wall Street remains bullish on the stock. It's up over 14% year to date, but questions remain whether the company can still impress investors. Options traders are expecting a 5.4% move in the stock in either direction after the results, which represents a roughly $280 billion swing. Let's get to Arjun for more. Arjun, we always talk about this as a macroeconomic event these days. What are we anticipating? Because it feels as though we could see a beat. Typically, the company does beat, but there is a lot of caution about the outlook.
It's a tough one because there's a feeling that what Nvidia has done and the massive growth it's seen is priced in. And that is the problem here is Nvidia needs to shift the narrative from, we're sort of steady as you go to we're continuing to grow very strongly. And that's going to be, I think, a lot of the messaging from the management. And there's going to be a lot of focus on Vera Rubin, which is the next generation platform. And you're going to hear that mentioned a lot in terms of how that's going to support future growth and the demand from that. One of the other issues is around customer concentration. It's been an issue for a long time where Nvidia and a lot of their revenue is coming from the big hyperscalers that are spending this massive capex, and so you'll probably hear Jensen Huang and other management talk about the fact that actually this is broadening to other parts of the market as well. So there's all these little issues as well. Look, just to kind of look at both the tailwinds and the headwinds. The tailwinds are the fact that hyperscalers are continuing to up their capex spend. One projection put their capex spend this year north of $700 billion, about a 90% jump from last year. All of the hyperscalers through the earnings season have reported backlogs of demand for their cloud computing business, and there's a shortage across the stack from production capacity at TSMC to memory, which is giving Nvidia, of course, that pricing power as well. And there is no doubt that it continues to have a very strong competitive position. The issues here is the continued narratives around chips from the hyperscalers themselves and those custom chips, the customer concentration, as I mentioned, and of course the financing portion here as well, and whether Nvidia is becoming almost like a backstop to these AI trade.
The other big point to make here is that Nvidia has also seemingly crossed over to become the banker. Yeah. It is not just the partner. We were talking about the thousands of partnerships inked globally. It is now a significant investor in companies in this circle.
And this is part of the narrative around broadening the customer base. So far, the hyperscalers are the ones with the money, right? They have the cash to spend on this massive capex. And so they have been natural customers of these very expensive Nvidia systems. Nvidia's argument here with this financing package with these financial institutions is, well, we could actually broaden access to these chips to customers who can't necessarily spend these large amounts of money. And so now here's a handy financing package that they could tap in to do that. Again, it's a lot of it is around narrative, because you mentioned there the sort of AI banker. that is a good way to put it. Is Nvidia becoming a central bank of sorts to this AI ecosystem, and does it become a backstop? And if so, that's more of a bearish kind of outlook on the sector, rather than Nvidia's point of view, which is actually this is going to increase demand. And I think that's kind of the narrative battle Nvidia's caught in at this point, as the market still remains concerned about the elevated levels of capex and whether this capex is going to be justified in the end by the demand that we eventually see.
Arj, I don't know if we'll get any more detail on this aspect, but I suppose what investors will also be weighing up is this decision to put up the prices for some of the most powerful chips for some of Nvidia's customers, and whether that might potentially hamper some of the anticipated growth and demand when those wanting to use their chips for operating cloud, storage, data centers, and so on, whether they're willing to pay the extra for that.
Yeah, I think what we've seen from the rises in capex from the hyperscalers is, while they've gone up, it doesn't necessarily mean they're buying more. I think that's a reflection of the fact that things are getting expensive. Memory prices continue to shoot through the roof because of the shortages. And of course, Nvidia's chips, a large portion of that is on high bandwidth memory, which is incredibly expensive. And so I think it's natural for Nvidia to put up their prices. I think the hyperscalers will continue to pay because Nvidia's chips remain, the top end when it comes to the need to train these models. But there are lots of shifts happening in the market. I think Nvidia realizes that there is going to be a shift towards a focus on inferencing, i.e. the running of these models. And that's why they did this sort of licensing acquisition of Grok, which is very specifically focused on that. I think there's going to be a lot of interesting talk, and you've seen that again with Nvidia on so-called edge devices, on laptops, on robotics, on cars. That's another kind of future story they're likely going to talk about on the earnings call as well. But certainly I think the price rises, they will be absorbed by the hyperscalers.
Yeah. Jensen has spelled it out really, hasn't he? All the areas, physical AI that he sees as the future, quantum. He's been talking about all the sectors that have been interested. But it is interesting how they're positioned around all those different investments. And the latest one is whether Perplexity is also in the sights of Nvidia. Perplexity is something that I use often. It's one of the AI models. But it could also mean that Nvidia steps into the frontier models with the likes of Perplexity.
With Perplexity, and I think this is, again, on one of the bets around the models being run on device as well. And this is something, Perplexity has spoken about, I think, running these models on laptops, on PCs, on smartphones as well. Nvidia wants to make sure that it is not just seen as this kind of, the chip company at the center of it. It wants to make sure that it's part of this broader ecosystem. And so that's why you're seeing these partnerships with Perplexity, why there is talk about robotics and autonomous cars, because, Jensen Huang wants the market to see that Nvidia is not just playing in the data center, that there is a future beyond the data center. And I think this is, again, going back to that narrative battle that he hasn't quite won yet with investors, that they're looking very much now at the capex and the data center, but not necessarily at these future endeavors around cars, around edge computing and all these other areas that Jensen Huang has said are going to be huge areas as well. And that's really part of the challenge for the company.
It's interesting, isn't it, just how high investor expectations are. And on one measure, you could look at how the stock has performed for Nvidia so far this year, up about 12%, broadly in line with the S&P 500. But when you consider that what we're expecting is for them to report that their revenues doubled in this latest quarter compared with a year ago, you might look at that and think, gosh, well, if the revenues have doubled, why aren't investors piling in? Why are they not sort of thinking, oh my goodness, this is the place to be? And I suppose that underscores just how high the expectations are and how much they not only need to meet, beat, but absolutely smash expectations.
Yeah, you're absolutely right. I mean, if we look at the stock from about middle of May, it's been in a kind of holding pattern until now. It's sort of been trading within a range because there's sort of no direction of travel. And I think that partly is because the expectations are so high. Nvidia needs to come out and really blow away expectations. It needs to do something that the market is not expecting as well. And I think given that there are still jitters around so many things, from capex through to competition around Nvidia, investors saying, well, where is that next leg of growth going to come from? And I think that's where, again, go back to Vera Rubin, the next generation platform, a lot is resting on that this next generation platform is going to be far ahead of competitors, that it's going to be attractive enough for the hyperscalers and other companies to buy, and that is going to support growth. And I think that's one of the things you'll hear a lot of talk about today on the earnings call.
Arjun, fantastic setup for our next conversation with Anne Glover, who is the CEO of Amadeus Capital Partners. Anne, thank you very much for joining us. What's your view on what we're expecting to hear from Nvidia and what's going to count today?
Well, from what I can tell, it's not so much today's earnings, it's the forward guidance that will make a difference. And I think there is expectations that CapEx will continue. And it's really, Nvidia is the place you would get the signal about that before the megatechs announce in October their actual spends.
So far, we've seen a concentration of purchases, the amount of orders going through really from the hyperscalers. Is there any sense that this is now catching some traction beyond just the hyperscalers because of the adoption that is taking place across businesses and sectors, the physical AI that Nvidia has been telling us about?
Well, the physical AI is really about robots, and that's definitely happening, but a little bit longer term. I do think that it's catching wider than the hyperscalers because enterprise and proprietary government spend, for that matter, will be using exactly the same technology.
And it's Arjun here. I just wanted to get your take on where you think the growth is going to come from for Nvidia. There are huge market expectations at the moment. How much is focused on the next generation Vera Rubin chip?
I think there is a lot of focus, but their internal planning will accommodate, exactly how much Blackwell will continue versus Vera Rubin, very high inference application. So I don't expect it to be a wholesale. There'll still be uses and replacement orders with Blackwell. So I think what you're seeing is Rubin is the next gen, lower cost, higher performance, which is necessary. And that called Feynman, which is announced for probably 2028. So their planning is incredibly long term. So I would expect to see a bump. I think they will have it well organized as to who's getting access to the high performance chips first.
There's been concerns in the market around the level of capex that we're seeing and whether that can be justified by demand. And of course, if there are any kind of, slowdown in demand around this AI story, that could have ramifications across the entire ecosystem. How are you viewing it at the moment in terms of the level of capex, if that's justified, and whether you feel that there's any kind of overcapacity at the moment?
No, there's no overcapacity. The supply strained throughout the system, and it's not particularly Nvidia that's constraining it. It's permits for data centers and the rollout process. So there's no question that it's supply constrained. Now there will be a compression on pricing for sure eventually, because I don't think anyone will. Enterprises will not be able to continue to sustain the cost line of all the tokens they're consuming. But so I think there will be sort of ways in which enterprises will try and be in their use of AI. But I don't think fundamentally will fall back anytime soon.
And we do appreciate your time today. Anne Glover with us, the CEO of Amadeus Capital Partners. And a big thank you to Arjun too for helping us out with the coverage on Nvidia.
OpenAI's head of data centers, Chris Malone, has recently left the company, marking yet another high-profile departure at the ChatGPT maker. Malone helped to oversee OpenAI's ambitious infrastructure build-out, including a plan to spend $600 billion on compute by 2030. A string of executives have recently left the business, including Chief Operating Officer Brad Lightcap and Chief Revenue Officer Denise Stresser. And hear more on what OpenAI had to say about the departure. It's all there for you, the write-up at CNBC.com. The Canadian administration has unveiled dollar-for-dollar retaliation to new tariffs imposed by the US on Saturday. The move doubles existing levies on steel and aluminium to 50% and introduces new 50% duties on dairy, furniture and clothing. The retaliation is due to affect $20 billion worth of annual US exports to Canada. Megan Casella has the details for us.
Canada saying that its retaliation will match the United States tariffs dollar for dollar and rate for rate. So Canadian officials announced tariffs ranging from 15 to 50% on about 700 U.S. goods. Items include everything from seafood and dairy to textiles, wood and paper. Some of the most significant duties targeting American steel. Those tariffs will double to 50% to match the U.S.'s rate. All of it set to take effect 2 weeks from today. Now, a lot of strategy buried in this announcement. For one, the list of goods hit appears designed to bring the most economic impact to states with big midterm races. Tariffs on metals and motorcycles, for example, will hit Michigan and Ohio. The seafood tariffs are going to hit Maine and Alaska. And then secondly, Canada also announced today a $7.5 billion aid package to support Canadian businesses and workers that are hit by the U.S. tariffs. They're really suggesting with this move here that they're bearing down for what could be a drawn-out fight.
Well, how much is all of that affecting markets? We will check in. You might be surprised by what we can tell you. But coming up on the show as well, Fed officials look towards a rate hike as one warns of a future reckoning over the US debt pile. Plus, hopes are raised of a temporary shipping lane in the Strait of Hormuz as Iran and Oman hold talks. We'll get the very latest from Dan. And we'll speak to Vivek Paul as BlackRock says the income landscape has been transformed in a new report. That conversation is at 7:30 London time.
Executive Decisions is the new podcast from CNBC, where I ask powerful leaders about their decisions that changed everything. I'm Steve Sedgwick, and here's the CEO of Siemens Energy, Christian Bruch.
Business leaders should not stay quiet in a world which is super complex. We sit in a privileged position, and we have to use that to ensure that society remains prosperous, stable, successful.
That's Executive Decisions with me, Steve Sedgwick. Get it wherever you're listening to this.
So I promised you we'd check in on the markets, and as you can see, that trade war between the US and Canada, well, to look at equity markets, what trade war? Equities largely seem to be shrugging off the impact for now. Let's see, of course, because those tariffs aren't taking effect, the retaliatory tariffs, until September. So for now, markets focusing on other factors, namely today's Nvidia results. And in anticipation of that, investors' positioning seems to be fairly positive. If you want to see what a three-day winning streak looks like, look to the Dow, posting its third day of consecutive gains, closing the session almost 0.33% higher. Gains to be found similarly on the S&P 500 and the Nasdaq, leading the way yesterday, closing 0.33% higher. We've got the Nvidia results coming later on Wednesday. We've also got this week, in fact, later today, we've also got the latest inflation data, the PCE. It's the Fed's preferred gauge of price increases. Let's see what investors make of that. That will set the landscape for Fed Chair Kevin Warsh's speech at Jackson Hole on Friday. That's the picture on US markets. Let's see how things are playing out in the Asian session. And again, plenty of green to be found across the board. The Kospi leading away, up more than 1%. Remember, we've got those big tech names represented there on the index, Samsung, SK Hynix. So you get that sense of positivity around the AI trade, helping to lift the broader Korean market. Also gains to be found on Japan's Nikkei and the Hang Seng as well in the Shanghai Composite. How does that all set things up for the European trading day? Well, a slightly more muddied picture. We've got the futures pointing to a positive start on the pan-European blue chip stocks 50, on the FTSE 100 as well. DAX futures, though, being called lower. And we've got the US futures as well, pointing to, well, a slightly more cautious mood according to the futures, looking at a negative start to the day on the S&P 500 and the Nasdaq. The Dow being called flat. We should just say this in the context of oil prices having come down and dipping down from where they were, second consecutive day of losses. Karen.
Let's push on to the Middle East. Iran and Oman have held discussions around the establishment of a temporary joint shipping route through the Strait of Hormuz and a mine-clearing mission for the critical waterway. Let's get out to Dan for more. Dan, a lot of crucial details there, temporary being one of the words. So does that suggest that this is just a short-term measure? And the other, the status of mine clearing, because the Americans suggest that the mines have already been cleared.
That's right, and the president actually posted on Truth Social overnight saying all mines have been removed or detonated from international waters inside the Strait of Hormuz. The president in this post saying Iran has been notified that any vessel laying new mines will be, quote, immediately and systematically destroyed. Now, Axios reports this morning that this demining could be quite a watershed moment here, largely neutralizing one of Iran's main sources of leverage. Officials also telling Axios it makes that draft Iran-Oman agreement far less relevant. Remember, Iran and Oman said on Tuesday that they had revived these talks for a new temporary corridor through the strait, with Oman's foreign minister saying future management of the strait and a permanent solution will follow in due course. So again, some confusion here about exactly what is happening inside the Strait of Hormuz. As it relates to the economic pivot that the administration took this week, of course, all eyes have been on China. China buys up to 90% of Iran's oil. It signaled very little intention of cooperating here. Beijing also warning on Tuesday that it would retaliate if Chinese companies face secondary sanctions. And the timing is very delicate here. President Trump and President Xi are due to meet in Washington in around a month's time. And all eyes are going to be on exactly how much political capital the president is willing to spend on ensuring that China is on side when it comes to cutting back its exposure to Iran, which is ultimately what the United States would like to see in order to bring about some kind of effective change among this regime. Also wanted to update you on some numbers out of Dubai International Airport this morning. I spoke with the CEO, Paul Griffiths, about the steady recovery in passenger traffic that the airport has seen through the course of the last few months. Of course, the first half of this year heavily disrupted by war. We saw airspace restrictions and a direct Iranian attack on the airport as well. DXB announcing this morning that it welcomed 31.5 million passengers during the first 6 months of the year. That's down just over 31% from the same period last year. But the monthly numbers do show demand improving as airline capacity returns. Here's Paul Griffiths speaking earlier.
It looks as though we are going to be on track for full recovery during the second half. And it really actually shows the resilience of DXB and the fact that the Gulf region, for transfer traffic in particular, is still, a complete focus for the world. Something like 100 million people transit through the Gulf airports, and we actually have about 45% of that market share. And I really do think that during the course of the next few months, we'll start to see us claw our way back.
Paul Griffiths there. He is the longtime CEO of Dubai Airports. And remember, the airport here, absolutely critical, acting as a real enabler of economic activity across the UAE and around the wider region. As you've just heard there, in the second half, he expects more airlines to come back. He expects a lot of the travel advisories as a result of the war to start easing up and countries opening their doors to the idea of returning to fly once again via Dubai. And also Dubai's business and tourism calendar also rolling out here, perhaps helping to entice the international traveller back once again. But of course, the big test is just how quickly DXB can rebuild that capacity and confidence after one of the most challenging periods in its history. And in fact, if you look at some of the airlines that are now operating around DXB, he said this morning that DXB is being served by more than 50 international airlines, but you still have these mega European carriers like BA, for example, KLM, Lufthansa and others suspending their Dubai routes over regional airspace risks, some of them until 2027, in fact. So again, passenger confidence here and the confidence among those airline operators still has some room for improvement before we see those airlines saying, okay, Dubai is still a place where we can safely fly. It's back over to you.
Dan, to the point around sentiment and security in the Middle East, the fact that we now have the administration, the US administration, trying to turn or twist towards economic sanctions, and very strong language, of course, used to economic D-Day, Operation Economic Outcast. The fact that we have this twist towards economic negotiations, does that mean that the region feels as though this is a positive, that we're moving away from sort of missiles and hard warfare?
Yes, of course, no Gulf or Arab leader would like to see war on their doorstep. And so much of the rebuilding confidence and capacity story ultimately comes back to ensuring that the kinetic strikes that we've seen over the last 6 months stop and the door for diplomacy remains open. A lot of these countries have already started to build back from the worst of the war impact, particularly from an economic perspective. But until there's a genuine resolution or an off-ramp to this situation that the United States and Iran now find themselves in, a meaningful return to pre-war activity, to pre-war economic levels looks unlikely at this stage. Of course, rebuilding confidence is just one part, but ensuring that this place is still somewhere where international travelers want to visit, where people are willing to deploy capital, people are willing to move and live here. Unless that comes back, then of course the economic lid will remain on. But this latest number out of Dubai Airport really shows that that rebuild is now well underway. Confidence is returning, economic activity is improving, but perhaps it could be some time yet before things really still return to normal.